Good morning, Cam the Mortgage Man here for Wednesday, October 2nd. Hey, I thought we'd pick up where we left off yesterday. We had covered what a world would be like without, well, not a world, but what Canada would be like without CMHC. We had done part 1 yesterday, and I'm going to do part 2 today. The next factor we could look at is retirement risk. Well, obviously, a lot of us know that older Canadians rely upon their home as their single biggest investment. And part of their retirement plan is to downsize the home, cash out, take the cash, and hopefully live off of it into their twilight years. But again, if we had a world without CMHC and the market was to severely correct, that's going to adversely affect a lot of seniors. So, something to consider. Higher mortgage rates, absolutely. Right now, government-backed financing gives investors the confidence to provide, mortgage money at reasonably favorable rates. But if CMHC were to pull out, and the bottom line is that nobody would really want to lend with 5% down. And if they did, if an investor wanted to lend in that market, they're going to charge a pretty penny for it. I deal with lenders, private lenders, who, when somebody can't get CMHC financing, will lend upwards to 85%. But believe you me, you're not getting 3% for that money. And unfortunately, that's just the stark reality of it. If there's a lot more risk involved, there's going to be a lot more of a premium. And for those of you who said, hey, the CMHC premium's gone, that may be, but if somebody's lending into this market, they're going to get a premium out of it one way or the other. They're going to have their own fees or their own built-in costs. What these would be, I would hazard to guess. I have no idea, but I can assure you this, they'd certainly be well above the rates we're paying today. Less lender choice. Well, the reason for this is without insured mortgages, fewer investors would provide small lenders with low-cost funding. Quite honestly, the only people left would be the banks. And when the banks and the credit unions get cheap deposits and superior credit ratings allow for, the best possible rates, this wouldn't occur otherwise, because these, banks and credit unions can get the money, like I said, fairly cheap. They're only going to lend to people who have stellar credit and stellar credit ratings. And the ones who don't, well, they're going to pay a pretty penny once again. Not that they shouldn't. Hey, let's face it, if you've racked up and killed your credit, you don't necessarily deserve to have the best rate as somebody who's done it all right. But quite honestly, you shouldn't be punished and crucified for it for the rest of your life either. You should get a second chance, and that's what CMHC's allowed folks to do, get a second chance. Restricted lending areas. This is absolutely true, because what would happen is most lenders, honestly, even today, don't like small rural markets. They know that when a house gets repossessed or foreclosed there, it's pretty hard to get out of it because not a lot of people are moving there. CMHC is one of the main reasons that they've continued to lend in this. Now, some would argue that, hey, so be it. Why don't we just have people living in metropolitan centers? Well, we could, but we would then have certainly not the country we have today. We have a diverse country where people are spread out geographically. We would have them clustered in different areas, and that necessarily for the socio-economic side is not exactly fantastic either. And what would happen is, as more and more people cluster to the urban centers, it would basically drive up urban values, and the rural areas would basically go, hell in a handbasket. So, at the end of the day, I guess we can look at many different facets and see what has CMHC done, and has CMHC been reasonable, and has it worked? Well, I'm of the mind that if it ain't broke, don't fix it. But certainly you can oil it and tweak it and certainly improve upon it. CMHC has helped Canadians because it's allowed more Canadians to enter the market. It's allowed new immigrants to get into the market. It's allowed folks with a lower down payment to get into that same market. And again, not just wantonly, not without thinking about it, but folks, they've still got to meet some criteria. They've still got to have reasonable jobs, good credit. It's allowed that. Plus, CMHC has given a second chance to those whose credit in the past, for whatever reason, has gone down the toilet, and they've made a comeback. So that's been a secondary option there. CMHC has managed to keep, basically their defaults near pretty record lows. Again, no guarantee that's going to happen in the future. Now, one of the other things CMHC and basically a required mandatory default insurance program does, it ensures the government can influence underwriting policies. Now, this isn't so fantastic because, look, sometimes the government doesn't always do the best things, and sometimes they get it right. So, you know what? You can go either way on that, but the bottom line is it does keep a bit of a handle on things. So, for the time being, it looks like, 20% down payment is something that we're going to talk about academically. I honestly know that the government's not about to come out and change that. That would be a dramatic shift. and it would cause a lot of bloodletting in not only the real estate market, but I can guarantee you in politics. So the trend towards having more and more of the private sector take over more of the lending is probably going to continue. Government over time might be looking to weed themselves out slowly. I mean, they have through the refinancing. CMHC is essentially out of that business. Before they used to insure refinances, but now you can't refinance more than 80% unless you can find a private lender who will do so. So they're essentially out of that. And over time, they'll probably get out of more stuff. So there you have it. I mean, that's in a nutshell what CMHC is done and what it would be like without them. Hopefully I've given you some food for thought, and it's it's good to look at all aspects of it, not just in an area where it affects you, but overall take a look at the consequences of what could happen all the way through. Is it a perfect system? No. But is it one that works? Yes. I mean, we are the envy of a lot of countries still. It seems to be holding fairly steady. Where the market goes from here, I mean, hey, it's anybody's guess. It'll be an interesting, like I said before, next 3 to 6 months. Anyway, it's been Cam for Cam's Mortgage Minute. If you do need any mortgage assistance, you're looking to learn more about insured mortgages, or looking to purchase that first home or second home or third home, give us a call at the Auxilium team. We're here to help. And I will see you tomorrow.